So, as it was mentioned, I work for the Community Housing Transformation Center. Quite a large name, but keep transformation as the key aspect of what we're trying to do across Canada. So we're a pan-Canadian organization, and we've been around for only 4 years, so maybe that's why some of you are hearing about the center for the first time. We are basically providing some funding that was initially mainly coming from federal government, and now we are trying to leverage what we had, setting up new funding streams. There's one in Nova Scotia, now one in Nunavut, and we're trying to replicate that, and also building tools and basically trying to fill gaps in housing services across Canada and support local and regional and national initiative for community housing in general. So I'm very glad to be here because many of your projects I've either heard of or worked with and hopefully funded some among your CLT project here today. So Plancher project, and I'll try to be very brief because I have only half of the time I anticipated I would have. So I'll walk you through what is Plancher and the model, the structure, how it works, and also I'll be around afterwards. So if we don't have time for question, you can always come to me afterward. So Plancher came about, so that is a Quebec initiative that the center was leading and funding, so we brought money into that, and that was a way for us to, a new approach for the money that was left in our allocation for the federal funding, and we wanted to do as much as possible. So instead of continuing, project by project basis of, funding, we wanted to take the rest of the money that was available for Quebec, put it on the table and bring partners to, well, at first, the first phase was consulting, and then that translated into the development of this Plancher proposal. So background, well, we're in a crisis, you know all about that, so let's move on. We can take a small pause there just to, well, you know all about that for those that are doing development. Right now, we're in a system where it's taking a lot of time to apply for any source of funding, but mainly it's governmental programs, creates a lot of delays, which increase risk of failing in our development project. And only once we do get authorization from governmental support, then we can start developing. We would like, and I'm sure you share that interest, of being able, once the need is identified in our communities, to move on and start development right away. And then turn toward our governments to fill the gap for those in the most dire need. So, in terms of affordability. So it's trying to imagine how we can shift from the system we're on right now to, tools and hopefully a new environment where we can conduct our own project, but still having support from governments at some extent. So this phase, I mentioned, so there was a consulting process at first. Over 200 organizations now have taken part into that process at one point or another, either local organization, federation, so all sorts of organizations from the sector, but more than that, it was also open to partners, plain community organizations that are not necessarily involved into housing as a main mandate. Municipalities, funders, foundation, all of those. And the consensus was easily reached over what is needed. So one, we need to change scale. I've passed. I've moved quickly through the situation, housing crisis, and all of that. We know that at the rates we are developing, it is not enough. And bring it back to the Quebec context. We've been building from 100 to 200 units in the best year, 1,200 to 1,000 units, yes, in the good years, where we know we would need to, double, triple that amount, and the goal is probably something closer to, 10,000 units we should be building as a community sector. So we need to change scale. We need to simplify development. I've talked about that a little bit. And also, we are not coming into that game empty-handed. We have built, for the past 30, 40 years, asset that we can leverage. So that is something we need to think of and see how we can leverage all those assets in the future. So from that consensus, we were able to gather all sorts of partners around a working committee. So you see at the top the different co-ops and nonprofit association for community housing, indigenous organization, social economy partners, foundation, investors, social investor groups, and also municipalities. For capacity reason, at first there were mainly the biggest cities, but from there, more municipalities are coming to join this working group. So that has been in the work for a year now. The first phase was very quick because the idea was not to reinvent the wheel, but rather take a direction. So the consensus part was only, it took a month through 3 different sessions, and now we've been working for a year on this. So I'll explain you. So the idea, because I haven't mentioned it maybe in the plain words, but the concept that is developed with Plancher is an investment fund to do development, if you haven't pieced it together before. So I'll walk you through just the mechanic of this fund in 4 steps. So step 1 is saying, well, let's leverage what we have, existing stock and asset. So it's mobilizing our co-ops and nonprofit and bringing this assets, or for Quebec, we're talking about $10 billion of asset. It's about 85,000 units we're talking about, just community housing, not leaving aside public housing. So $10 billion of asset, from which half, so $5 billion, is in equity. So there's a potential of $5 billion that we could bring forward and we're basically saying that to the sector, but all investors, like bring that into Plancher. That enables Plancher to go see the banks, so that's the dollar sign. So we're asking groups not to give their asset. Of course, they keep total ownership of that, but it's to put as a, sorry, the word is a tough one for me in English, collateralization of their asset through Plancher. So with that, Plancher can turn and go see the bank and open a line of credit. So that's half of the money, you will see it later. And then we are basically telling all other investors, governments from all levels, foundations, and other investors group, to pool their money. So one place, one fund, not several, only one. With that, so you see it at the top there, you have the housing providers, you have other investors, all together, they are putting together an investment policy, one single investment policy, and then that will be operationalized by a mandated team of analysts, probably coming from a financial institution. So the idea with Plancher is not to set up a bank and start hiring people and setting up expensive tools, but rather to delegate that to someone in the sector that already have that capacity. According to the investment policy, Plancher is now able to issue some funding for basically three things. First, and very important piece, renovation. We are asking groups to lend their capacity to get a mortgage, basically, by coming in Plancher. So the first thing they will need is, if the roof is leaking, is for Plancher to give them access to a renovation loan. So that is the first piece that need to be addressed. So it's basically 20% of this whole fund that would be at all time dedicated to renovation. So woohoo! Quicker access to funding, to financing if you have an issue on maintenance. Second, of course, we want to do acquisition. That's a theme that have been addressed throughout this event. And also, we need to build new, even if it's very expensive at this point. But we think we can do all of that. No. Third step is for those projects that benefited from loans. Well, they have to reimburse loans, so capital and interest. Back to Plancher, and Plancher can redistribute the interest, the interest, the benefit gain through the funding. So the first benefactor of that will be those groups that did participate by investing their asset. So we say you will get 1% of new revenue that no one is giving you. So for a co-op, a local co-op, 12 units, we're happy members of our co-op. We don't really want to engage in risky development. That's not our mandate. That no one in our co-op have that expertise or willingness to engage into buying the neighboring building. But Plancher opens for them two things. One, having a new return on investment. That's pure new revenue, and that's their revenue. So you can do either your repairs, you can do some tenant support, you can throw a huge party at the end of the day if you want to. Then we also, of course, reimburse our line of credit. So that's the dollar sign again, and give return for all the rest of investors. So you see it again. I forgot, but there's a 0.5% management fee for the Plancher team to operate that. And you see the 1%, and well, it's a blend, but the 5.5% for other investors. Yeah. Going through, so you see it as a level of a building. So there's already existing mortgage on the existing asset. There's a part of the equity in yellow we won't never touch, so we don't go at 100% of equity potential. But there's still some equity that can be leveraged. And so the financial institution issue a line of credit for Plancher. Loans are issued to new projects that do provide the 1% at the end of the day that returns to the participant building. So the investment targeted with that. So we're talking about $1 billion fund. That's not, bad money. It's not a lot. It's not sufficient. It won't answer to the entire housing crisis. But we're starting to reach, a significant level. $1 billion fund that half of it would be leveraging existing asset. So as a sector, we would come in Plancher being, half of it. Of the contribution, which is also reflects back to the community governance of that new structure. And the other half would come from all the other investors I mentioned previously. we can see that it creates a 5 million new revenue. That's 1% of the 500 million. With that, we intend to, and I'll show you what are these, but 4 different financial products, plus a community development support program. I'll elaborate on that. But one important thing also we are requesting from government, and it could come from all levels, but basically our request is addressed to mainly federal and provincial government, is to put a first loss protection to that fund. Because as a co-op, I don't want to see my building being taken away because some project that we supported didn't fulfill their responsibility to reimburse the fund. So, you know, will I lose my building if I invest in Plancher? No, there's several securities and protection set into place, and that would be, you know, the last line of defense, if I may, for this fund. And we are saying by making available this $1 billion fund, there would be an extra $500 million from just the regular banking system coming in the sector. So it's, at the end of the day, $1.5 billion we think we can move by leveraging our asset. So you see the financial project. I've talked about renovation loan, which is very important, but let's go to the 5th one and start our way up. So as an existing group or new group, I want to engage in development. Well, it takes liquidity. We need to hire a consultant. We need to do some due diligence on any opportunity that we're seeing around us and pay for all sorts of studies. So therefore, we need easy cash to be obtained. So that is the community development support program, and it would take a form of forgivable loan, basically. So gives me access to easy liquidity quickly, but if we do encounter huge difficulties and we are failing our project, it doesn't sink the whole boat. You know, so, but interest are being taken, of course, on that. It's short term for pre-development phase. The fourth product is also a missing piece right now in the ecosystem, is the option for groups to purchase something that is not necessarily residential yet. You know, we see a gas station that is closed in our neighborhood. We want to buy it. Well, this lot is not zoned residential, so we'll have to undertake some zoning change. Also, it's contaminated, so that requires some extra funding, investment to do the decontamination. So therefore, this product would enable group, you know, get the community development support programs or forgivable loan, and also purchase this piece of land that we want to repurpose and redevelop. Then you have the regular mortgage product and an equity investment fund. So basically, with this, we can fund from A to Z the entire development project and do the renovation 20 years after. It's integrated. So in this proposal, it's not, maybe not perfect. I'll be happy to get question and reaction on that, but there is no program, to my knowledge, that does everything at once. So that's unique of that proposal. And you see the rates. So these are pretty much up to date. They've been updated in the last month, I think. So we're able, in the best situation, to be even 1% under what is offered from banks for the mortgage and renovation loan aspect. And the equity investment fund piece, the second one, is acting as the down payment. So you don't even need to have a down payment to engage into development. Plancher could give you 100% of funding. So you see here the hypothesis. If we go 100% in acquisition, we could do with Plancher 6,800 unit. If we go in new construction, it would translate, because of construction costs, 3,600. And renovate still about 300 units, where I think the metric here is $1,500 per unit. That's how we come to 3,000 units renovation, renovated. Here you have an overview of the differences between market product and the Plancher product. Probably even, the valuation fund would even be more expensive in terms of rate. But anyway, at the end of the day, for a new construction, if we were to go with market product, our rent level would be at 2,700, where with Plancher, we think we can, using the same number, we would have a difference of $1,000 on the rent level that we can come up with. You say, well, that's not affordable. No, for many people, it's not affordable. But it allows us to do the most of what we have and undertake those developments today. And then, as I mentioned at the beginning of the presentation, there is a role for government to answer the need for deeply affordable and provide support for those more in need. So there's already programs for that. Rents up, extra subsidies to lower the cost of financing. But at the end of the day, we are able to provide a rent that some people will be able to pay, and that will also enhance or increase our presence in the overall market, which at the end of the day will bring some fresh air for everyone. Doing stage. So you see here, I'm repeating, I'm probably about to be over my time now, so looking how much time I have? 3 minutes? Yeah, you see how the products are being used. So, a new project would benefit from both community development support program and then valuation fund to engage afterward in the overall funding. So you see all the different products being engaged in the development project. Also, it's a tool. It's many tools, in fact, with the different product. But if you have other subsidies, you want to use another program, go for it. You have already your down payment, skip that part. Just take what you need. So no obligation on that. Again, so just to picture it with numbers, it's good. Even if we don't have time for questions, I'll be available. But it's interesting. So the example of let's take a co-op again. 20 units, have a dormant equity of 5 million. It's not running, not doing any return, but I still need to pay my repairs, so I'm taking a loan at 5%, and at the end of the day, that will affect, translate to an increase for rents of $290. And the other case, the other example, so now with Plancher, my equity is giving me a return, so I have 5 million, that gives 50,000 at the end of each year, recurrent new revenue. I have better rates on my loan to do my repair, a $1 million loan I'm taking to do my repairs. So it costs less, and the overall result is that I still have a new revenue and a loan that costs me less. So the impact on the rent level would be only of $110 per unit. What are the securities? What are the protection? I don't want to lose my asset. Well, there's many of those. Doing a good selection of project. Of course, if you're having trouble, what do? You go trouble reimbursing your mortgage. You go see the bank. Say, I have difficulties. Well, we are restructuring that with the project. If there's still a problem, Well, we might have to seize the product, the project, sorry. But we're not a bank, so we won't have to sell it on the private market. We're, in fact, in this case, the savior, because yes, maybe there's some issues with the project, maybe it's the group managing it that have difficulties, but we don't intend to sell it back to the private. No, we will look around, see in the communities who other organization can retake that project and have a sound management of it. At the end of the day, if there's some loss to be absorbed, well, it's a portfolio investment, this whole fund. So, of course, there's a return on investment for investors. So we can play with that. For other investors, but at the end of the day, also the 1%. If we can't deliver on that, it's an investment. We know if you put your money elsewhere, you have an expected result, but it might translate from one year to another to a lower rate. So, but we are covering that. And if, after all of that, there is a loss, well, it's not a net loss, because, of course, there's value in the land, there's value in the project, so it's not 100% loss. It might be, 10%, 20% loss at the end of the day. We might need to put extra money in the project, but that's where the $100 million first loss protection would come. So, yeah, that's what I can say for protection. There's benefit for municipalities, of course, because that would increase the number of funding available on their territory. Right now, how we frame it is that, for each dollar that a municipality would put, Plancher could reserve 5 extra dollars, so matching dollars have a significant effect. And also, that is something relevant for everyone. In Quebec context, municipalities have now a first right of refusal on transaction being made on their territory. And some are putting together funds to purchase land. Well, we're coming to them saying that is a tool that will make it more efficient for you to buy, but gain, you see your money coming back quicker, because you don't want, the municipalities don't want to sit on a piece of land they've acquired for eventually doing housing. They want to see housing being made the day after. So with Plancher, because of course it's working hand with hand with the community housing sector, well, we can come in, say funding is there, we have organizations that are willing to undertake that development, so therefore, it takes just the day after the city does the purchase, we are ready, already ready, yeah, to move on. Oh, something have appeared. I guess that's the end of my presentation. Oh, thank you. Sorry, I had to go really quickly through that. It takes way much time usually, but thank you for listening. I hope it was interesting.